a big chunk of the audience is also relatively new to the energy markets, might not be familiar with the whole history. Germany is already unique with the 4 German TSOs, of course. Can you just walk us through why is it like that? How was it before? Where did it originate from? Can you walk us through?
Absolutely. The thing is, it's not only that we are having 4 TSOs, we are having 900 DSOs in Germany. And that is a huge number. That's why the market was always interesting for every player to enter the German market. The reason for that, I think, I often, when I do my education, I'm showing a map of what today is Germany from 1700s with all the little tiny kingdoms and little cities and so on. And then I show a map of today's DSOs. And they are scattered. It looks almost the same. And I think in parts it's a bit of the federal structure we're having in Germany, that we are not centralizing things. It's distributed quite a lot. And every tiny little city has its own municipality, so its own utility, but they're so small that we call them municipality. And that makes it seems to make it a bit more complicated, but enriches the whole landscape. The 4 DSOs actually back in the days were 8. So we started with 8 DSOs, but then the German government, who owned a few of them in Eastern Germany, were selling them. And the rules have been that it should have been sold only to a German company. And there was a DSO in the city of Hamburg, owned by Vattenfall. So the TSO of Hamburg bought then the grid of Eastern Germany and of the city of Berlin and became Vattenfall, what we as know today. And the grid then has been split up, and it's today 50 hertz. Then we had several mergers. So 2 merged, which was Bayernwerk and Preußen Elektra, to what today is known as TenneT TSO. And then we are having the 2 others, which is Amprion and from the EnBW Transnet BW. So in the end, we end up with 4 TSO, which is quite unique in Europe. But still, they're working quite strongly together, and it does not really hinder the trading, as in the end, you only need to split up just before the physical delivery all your trades. So usually you need to have a balancing agreement with each of the TSOs, but you have a favorite TSO balancing group where you are trading in before the physical delivery. And just right for the physical delivery, a few hours, a few days before, you split that up between the 4 different ones when you want to deliver physically the power.
Thank you for walking us through on that one. And one of the earlier topics that you mentioned was the connectivity of Germany, of course. Lots of neighbors, lots of cross-border connections. That's also, of course, interesting from this whole TSO standpoint, because there it is all about presence. One step back is roles in the European system. You mentioned, of course, the development, but can you also look a bit here at the fuel mix? Because the fuel mix has massively developed as well. Of course, very lignite and nuclear driven to very renewables. Can you walk us through on how that has been and a bit of the political lowlights and highlights during that whole transition over, let's say, the last 15 to 20 years?
Yeah, I mean, when in this case, I'm happy to look backward, but often we look also forward. And in the forward looking, I'm explaining the history by 4 different approaches, which is we have a French approach, we have the German approach, we have the Polish approach, and no, in the end it's 3, sorry for that. And maybe you can also look into the Nordics, which would be then the 4th one. The end is that you mostly had a dominate power technology, which usually comes from the history. We should always remember that when you build up conventional power plants, but even fluctuating renewables, these assets will be around for minimum 20, 25 years, 30 years. If we look into French nuclear power plants, for example, there might be around in the future maybe 100 years and are already there for 60 years. So you have long-term decisions on your power mix itself. In France, of course, it was nuclear energy at a certain point. But the nuclear energy was not enough really to cover the demand spikes France has, especially in cold waves in wintertime. So that's why they had oil-fired power plants or gas-fired power plants as classical peakers. In Germany, the approach was mostly back in the days of national resources, which was lignite, which is quite unique in Germany. We have a bit of that also in Poland, and hard coal, as we still have a lot of hard coal resources, but it's very expensive really to mine those in Germany. That's why we mostly are importing them since more or less 20 years. And of course, we had a nuclear mix also in Germany, and for peakers, we used gas. Poland, for example, has mostly fossil fuels, which is lignite and hard coal, and some gas. And you can see this on the building years of different power plants, especially now for Germany. Those older power plants are mostly from the 50s and 60s, are hard coal and lignite. In the 70s, we started quite a lot with nuclear energy, as was thought that nuclear energy would be the future back in the days. And actually, funnily enough, when I was working here as an internship back in the days in the local TSO, I discovered a plan to build up a nuclear power plant in the city of Berlin. So just imagine that, building a nuclear power plant in the middle of the city, but back in the days in the 70s, this was quite normal. And then we had the agreement with Russia regarding natural gas. And the natural gas delivery was quite huge in the end until the invasion to the Ukraine. And based on that, we've built up in Germany a natural gas mix, which was mostly peakers, so gas turbines, but also combined cycle gas turbines, CCGTs, which are quite highly efficient, especially if you use them for heating, district heating. And in Poland, of course, then it was their mix. Germany made a decision at a certain point to make the so-called energy transition, which means that we want to go away from fossil fuels into, let's say, green fuels. I'm saying this in this way. I would not like to say it's CO2 or low CO2 emissions. In the end, that's it. I mean, it's about against the climate change and climate neutrality. That's why we started, I think, 25 years ago with the first wind farms. And back in the days, we had 2% of our energy mix based on fluctuating renewables. Today, it's more than 50%. I think it was 54% last year. Mostly wind and solar, and a bit of wind offshore and wind onshore. Not so much hydro. In the Nordics, for example, especially in Norway, they have 96% hydro production. In Sweden, they have hydro and they have nuclear power plants. And in Finland, of course, they have nuclear power plants and some biomass. So each country had their own political decision, which then affects the fuel mix. And the fuel mix then affects also the price pattern on the day-ahead market.
Looking at this price pattern on the day-ahead market and the effect of the fuel mix, we're already thinking, of course, merit order. And I want to make a little step here outside of the box. We are in a pretty efficient market right now, and there I'm suggesting the EUPHEMIA algorithm, of course, market coupling, cross-border optimizations. But can you also tell us how it was before, when there was no coupling yet? You started about modeling, independent local power exchanges, cross-border flows, and how did you model that? Was it like all manual merit forecasts per country and then be active on the cross-border, or how was it back then?
Well, today the market price development is integrated, which is really interesting, and it makes it a bit easier to model. It's a bit complicated when you come to flow-based market coupling, which is today's standard. Before that, we had the net transfer capacities, but still it was a so-called intrinsic auction. We must understand that in the day-ahead market, we have an auction system and not a continuous trading, which then we have in the intraday market, but also on the long-term market. For us as modeler, and I always say modelers make their world very easy because a model is always the reduction of the complexity of the reality, which means I must ignore certain effects in reality to be able to model stuff. And intrinsically, a model is wrong. And that's a fact. Yeah? Every model is wrong. Every model has its mistakes. Sometimes the mistakes are a bit lower than it's a good model. Coming back to how was the market design? Of course, we had the day-ahead market, and you have different modeling approaches. If you have a stack model, then you're simulating the merit order. You can also do this econometric-wise. With a time series model, then you ignore a bit the stack model, but you must play around with something like mean reversion. That's quite statistic, but you have to have a different modeling approach. And then the challenge was, how does it really work with the cross-border trading? We had the challenge back in the days, and we did this in 2 steps, as you mentioned. We simulated econometrically the different markets in the first step. And after that, we simulated rational behavior in cross-border exchanges. So then we expected that from a low-price country, electricity would flow to a high-price country, as it says, buy low, produce low, sell high. The reality, as it was not coupled and decoupled, and you had to first bid on the intraday capacity for the cross-border exchange and then bid on the day-ahead market. And call it intraday because the TSOs had certain capacities for themselves to stabilize the flow and gave only parts of that on a daily basis to the market. And sometimes we had illogical flows. So electricity was flowing from the high price zone to the low price zone, which doesn't really make sense. And this was a huge risk for traders as they had to trade on two different markets. That's why, and I can't recall the year, but it was 2005, 6, something like that. We started with the market coupling, so the integrated auction between major countries. In today's world, it's a bit easier to simulate and also to trade, but still some countries, sometimes we have illogical flows in the end, but that's a different reason, and it's not connected to the day-ahead market.
Then we go into the efficiencies of the algorithm, how to optimize the welfare.
Yes.